Hi, this is Sam with this episode of Living Working Abroad show. Welcome to Cyprus Tax. Mayday, Mayday. We can now submit our returns. Each year, the tax returns are due for the Cyprus tax year to the end of December from February, March time onwards. This year there's a delay. Everything is online, so you can only submit those returns online. And for this year, by the middle of May, there's something becoming online. There are some teething problems still as the software is updated and stagged, but essentially still individual tax returns are submittable through the original TaxisNet system. So there's a tax for all, there's a government.cyprus website, same as around all around the world, with exchange of information. Governments have a central portal, a .gov portal, which allows data exchange with all the government departments and between governments for exchange of information for tax data around the world. So Big Brother is watching you through to the .gov websites around the world, and the teething problems in Cyprus means there is a bit of delay with those tax returns, but they're now submittable in May, due by the end of July, with any balancing tax payments for the previous year payable by August. Have in mind, if you're a tax resident in Cyprus in 2024, you should be paying your tax in June and December each year. So have that in mind, and for 24 you should be due your first instalment of whatever your relevant tax is in the coming month. If you need more help and guidance, contact us at proactpartnership.com and we can help you with our annual tax service to complete and submit tax registrations and returns. But who needs to complete a Cyprus tax return? Well, again, we've got a big change here for everybody who is a taxable entity in Cyprus, a business, a trust, a property registered in Cyprus, whether it's renting or earning income, or an individual has to complete a tax return. In the past, there was a thing that an individual didn't need to automatically complete a tax return. Well, that is true now. It's always been true if you've got property rental or a business income in Cyprus. So if you're an officer of a Cyprus trust or business, you've got a tax return obligation from that for income or gains. Remembering that in Cyprus, the main capital gain or the sole capital gain liability is on Cyprus real estate. So it's only if you're selling or disposing of a Cyprus property to a third party do you have a capital gains report to make in Cyprus. Gifting property in Cyprus, there's no inheritance tax. So if you gift property to family, you can do that transfer without any capital gains taxes, maybe some small transfer taxes and levies, but nothing substantial. The big tax change for this year, coming in May 24, is that a full year tax return is due for all individuals as well as businesses and trusts in Cyprus. And if you're a tax resident, so who is a tax resident in Cyprus? Any officer with a company or a trust or property based in Cyprus is obviously got a liability in Cyprus. For an individual, it's slightly different. An individual has to have a residency permit to be in Cyprus. Now, again, Cyprus is going through a transition phase, trying to join the Schengen zone in 2025. You can find out more about EU Schengen zone on the Living and Working Abroad show channel on YouTube. But Cyprus is trying to join the Schengen zone and adapt its rules and its regulations to fit that. So they've already got and introduced over the last 18 months a visitor's visa, a visitor's pass, which is a 12-month visa, but that was being issued under the old rules, and now it's moved to the new rules because it is just for 12 months. So it gets over the Schengen zone limitations of the short stay rules for 90 in 180 days, but now you don't get a residency permit for that visitor's pass. So the Cypriot process was putting people through on a visitor's pass in 2023 to issue them with a resident permit, but actually it's not really what they need. If you've got a property and you're staying in Cyprus for more than 183 days, you should have, with that residential address, you should have a resident permit, not a visitor's pass. So it's a different qualification and there's different requirements for that. So the people with just a visitor's visa can't get a tax number. You need the residency permit in Cyprus to get a tax number as an individual, and then you can be tax resident in Cyprus. If you don't have a residency permit in Cyprus, then your tax domicile, your country of origin, retains your right to tax unless you're tax resident in another country. Clear as mud. You can see more information about that at our Living Working Abroad show on YouTube, Twitter, X and Facebook, as well as LinkedIn channels. And follow us at poetpartnership.com. So there's hurdles to be met just to become a tax resident. Once you are a tax resident, then you're liable to tax on your worldwide income. And that's assuming that you stay in the country for more than 183 days a year. However, for people that are remote working, or either that they want to be based in Cyprus and work abroad from Cyprus, or maybe just they want to be a digital nomad but they want to have a tax residence that's not their home country. So for a UK expat that doesn't want to be tax resident in the UK but wants to be a nomad and move around, they could consider using the 60-day rule in Cyprus. Now the 60-day rule means that you've got a residence in Cyprus for the whole of the year. So if you buy a property, own a property, or you are renting a property in Cyprus and you're there for the whole year, and you're not tax resident in another country, so you're moving around as a nomad, using the short stay rules generally for each country, 90 days, then you can be a tax resident for the year on the 60-day rule in Cyprus. So as long as you're not tax resident in another country, you're not in another country for more than 6 months, and you maintain a residence in Cyprus with a residency permit, you can remain as a Cyprus tax resident with the potential advantages that gives people to save and pay zero tax on dividends and interest, and pay a flat rate 5% on interest, and only pay tax on a remitted basis. So a remote worker that's working abroad and not bringing money into Cyprus on a remittance basis isn't necessarily paying income tax on that income. For more information and guidance on the tax benefits of living and working in Cyprus as a remote working, online working nomad, contact us at poetpartnership.com. The core reason why Cyprus is now being required to introduce and compel people to complete a tax return if you're tax resident in the country is to do with the introduction of a flat rate tax that they call the health tax. Many other countries already have the official obligation, if you spend more than 6 months in the country, to complete a tax return, and that would apply in Portugal and Spain, for example. In countries like the UK, you have an obligation to complete a tax return if you're resident and you've got a tax liability, or you're asked to by the HMRC to complete that tax return. But now, if you're resident in Cyprus and a tax resident in Cyprus for either more than 6 months, or you want to use the 60-day rules, then you have to complete a tax return as an individual to pay the health tax. Everybody who's a tax resident in Cyprus has to pay the health tax on their worldwide income, period. So all the rules to avoid tax on income, worldwide income on a remitted basis, on pay 0% tax on interest and dividends, or pay 5% on pensions, they still stand for Cyprus tax residents, but the health tax isn't in addition. and it's a flat rate 2.65%. So it's an additional tax to be paid. So you still pay your 5% on your pension plus your 2.65%. You still pay 0% on dividends if you're registered as a non-dom in Cyprus tax resident, but you pay the 2.65% as well. So health tax is applicable to worldwide income, whether it's earned in Cyprus or abroad, no matter what other tax rules you're using. That may sound complicated, it may sound convoluted, it has got some advantages. So the basic tax rate hasn't just gone up by 1 or 2 or 3%. A new government hasn't come in and changed the tax rules. The tax rules are still essentially the same. So for expats, they can enjoy a non-dom status with 0% dividends, 0% on interest, 5% on pensions, and no tax on unremitted overseas earnings, but they now do have to pay this 2.65% health tax. If you're working in Cyprus and you've got a Cyprus business income or a Cyprus employed income, the social insurance associated with that income is part of your, includes a health tax. So you won't have an additional health tax to pay. But if all your earnings as an expat is from abroad, you've earned a 50,000 dividends from abroad, then potentially you've got a flat rate 2.65% to pay on that, which is around about £130, 130 euros, depending on your currency. That doesn't give you Cyprus state healthcare. It's a health tax to pay for the health service, but it doesn't automatically qualify you for that health tax. To qualify for the health tax, there's a number of different ways. First of all, you're working in Cyprus with an employment or a business, a self-employment in Cyprus. So if you're an officer, a director, or you're a trustee taking an income, or you're paying social insurance somehow in Cyprus, that social insurance payment will qualify you for Cyprus state healthcare. Being a resident is not enough. Whether it's a visitor's pass or permanent, any other residency, doesn't qualify you automatically for state healthcare. Permanent residents, if you've lived and or worked in Cyprus for more than 5 years, you can get a permanent residency status. If you need to change your residency from a temporary status to a permanent status, you then get Cypriot citizens' rights. And so you get treated like a Cypriot citizen. A Cypriot citizen automatically qualifies for Cyprus healthcare on the state system. So a permanent residence does as well. Except a new rule for 2024, it's a mayday to all expats living and working in Cyprus. If you are in Cyprus and you reach your state retirement age for your EU or your UK, Norway or Switzerland state pension, even if you're a permanent resident now, they will withdraw you from the state healthcare until you register to exchange your state healthcare rights from your home country to Cyprus. That's done with an S1 form or an A1 form. So although the UK has left the EU after Brexit, it's still part of a reciprocal social insurance agreement with the EU. And the EU has also got that same reciprocal social insurance agreement with the EEA, which includes Norway, Iceland, and Switzerland as well, and Liechtenstein. So all those countries are part of this social insurance agreement. So if you're from one of those countries and you're living and working in the EU and you reach a state retirement age, you'll be required to request the equivalent of an S1 or an A1 from your home country to continue with state healthcare in Cyprus. Why? Because that means your home country is now paying for the healthcare in Cyprus. So it's a way of Cyprus collecting tax and collecting payment for your healthcare while you are a Cyprus tax resident. The good news is, if you register your S1 or your A1, you don't have a tax return to do on your worldwide income. You might need to confirm that on your tax return on the first page, and if you can do that, then you'll have no health tax to pay. Bizarrely, in Cyprus, there's still a system where a paper card, medical card is still issued. It's white, and an expat who's registered an S1 or an A1 to transfer their social insurance medical rights to Cyprus will eventually, subject to bureaucracy, get issued with a white medical card, and that white medical card is a reference number that needs to go onto your Cyprus tax return. For more information and guidance on that, contact us at proactpartnership.com, and have in mind the Cyprus bureaucracy does take time, and we do get them for clients when they've already died. It's taken that many years for the white medical card to be issued, so bear with us on that, but contact us at proactpartnership.com for more help and guidance. Have in mind, in previous years, if your total income was below 19,500, you weren't necessarily obligated to complete a tax return for Cyprus. If you then sold property, you'd have to. So there are always instances where you have to backdate and complete those tax returns anyway. Now you do have to do it because everyone has potentially got a liability to this health tax, and only those people that don't, because they've registered an S1 or an A1, or they're paying social insurance in the country, they're the only people, if they can confirm that on their tax return, that they don't need to complete that tax return. Some people, UK expats, want to keep paying tax in their home country to try and retain healthcare benefits. UK expats should understand that technically, if you're not resident to the UK, then you are no longer qualified for national healthcare treatment. Only residents of the UK qualify for healthcare treatments. So as a citizen returning to the UK, you can qualify for healthcare at the moment. There's no further checks and balances on that at the moment, but technically an expat returning to the UK and expected to pick up NHS treatment could be charged as an expat if you're registered abroad. The S1 for the retired expats does that. An S1 could also be issued to a short-term remote working expat. So if you're going on a 1 or 2 year contract to live and work abroad in a country with a reciprocal social insurance agreement, which includes all of the EU and Cyprus, plus countries like Turkey, Philippines, Bermuda, Bahamas, and USA, then you can get a short-term contract to get healthcare in that country, state healthcare provision in that country. Otherwise, the UK, you're still going to be taxed at your highest rate in the UK. Pensioners in the UK can pay 5% flat rate tax on their pension worldwide, plus the health tax now, 2.65%, unless the S1 is registered. Expats can pay 5% flat rate tax on their pensions in Cyprus, plus the health tax, unless they've got an S1, A1 registered in Cyprus. Okay, but you must do a tax return to confirm that, and the health tax is a flat rate 2.65% on worldwide income. There's no personal allowance for the health tax, and so even with a 10,000 income, you could have a liability to 2.65%. If you have a state pension, you can be issued an S1. If you have a private pension but no state pension, you won't be entitled to an S1 unless you're working abroad, and you could get an S1 for 1 or 2 years based upon that working abroad. State healthcare in Cyprus requires social insurance to be paid or an S1, A1 to be registered. For more information and guidance on that, contact us at proactpartnership.com, and we can help and guide you for residency permit, for Cyprus tax registration, for business and trust and property registration, property rental tax returns, trust tax returns, business and management accounts and accounting, as well as individual tax returns and rebates. Tax returns are due for most people, even if you've got no tax to pay because you have a low income and or an S1 registered for social insurance healthcare exemption, you still need to confirm that now in your tax return this year. Most people need to do that return. If you haven't got an up-to-date tax return number and a tax registration service, we can help you do that. Contact us at proactpartnership.com. The Cyprus office, the EU office of Proact in Paphos, Cyprus, can help and guide you every step of the way. Thanks a lot for listening, and we'll see you again next time.